Well, we've been talking about how the TSX has been trading around record territory, and while the broader move in energy stocks this year has helped to make that happen, energy names have not been the biggest gainers so far in May. That likely has something to do with the fact that this hasn't been a big month for the price of oil itself. WTI started the month north of $80, so it's been in a fairly tight range. And crude has come down close to 10% from where it was early April. Some say that's a fading of the geopolitical premium we were seeing as things play out in the Middle East. But certainly people are also trying to get a sense of the demand story. That's going to be a consideration, one would think, for OPEC Plus members who are set to make a decision on their production plans at the start of next month. Let's bring in longtime oil watcher Helima Croft, who is head of global commodity strategy at RBC Capital Markets, for more on what she is watching. Helima, so many different, I guess, threads we can pull out here. What's the one you're watching most closely right now?
I mean, we're watching clearly what happens with the upcoming OPEC meeting. I think that's going to be very important for the back half of the year. There had been expectation at the start of the year that OPEC would start bringing back some barrels. But given the current softness in oil prices, renewed concerns about higher for longer with interest rates, concerns about what we're looking at in terms of the products market, some softness in diesel demand, some concerns about China, I think it's looking more likely that OPEC's going to roll over all the cuts through the end of the year. So I think that's going to be an important meeting. The other thing I think that we're watching is we've really seen all the geopolitical risk premium come out of this market. When you had that, Israel-Iran confrontation that did not lead to a broader war in the Middle East, I think people have really sort of faded that story. So do we get any return of geopolitical risk premium in the market in the back half of the year that gets us out of this sort of current range? Barring a big geopolitical story, I think we're kind of stuck here for now. So the question is, does OPEC do anything that gives a little more momentum to the market?
And you talked about interest rates, and we obsess over what's going to happen with rates and how the stock market is reacting to that. Is there a way to quantify higher for longer interest rates and what that means for oil demand?
I think it's, this is so interesting because I actually feel like when we talk about the interest rate play, I think it's more of like people who trade oil as part of a macro book. I mean, certainly there is like a broader sense that higher rates will impact demand, but really demand is pretty much held up. I mean, not spectacular, but it hasn't fallen off a cliff. So I really feel like when we talk about interest rates, when we talk about the dollar, that becomes part of the sort of financial story of oil. The people play oil as part of a macro trade. And certainly, I think people respond to interest rate fears in terms of what they do in terms of oil markets, but we're seeing right now any serious indications that it's impacting demand.
So maybe if we're going to take the bullish side on this, what has helped demand at the very least to hold up? If some people are out there, I just feel like every day some people make a case that there's cooling demand, but then you see data that would actually support a reasonably healthy market.
So it's a kind of a story of like, what are we looking at in terms of the barrels? So on the bull story would be jet fuel demand, gasoline demand is held up. On the sort of bearish concerns, we're looking at softness in diesel, and that is seen by some as an indication of slowing industrial demand in China. And so it really is what part of the barrel that you're looking at. And there's seasonality that obviously comes into the story as well. And so I would say the demand picture is not, falling apart. Again, some corners of the market are showing weakness, some are showing strength. And that's why I think when you go to this OPEC meeting in a couple of weeks' time, those are the type of considerations that I think are going to lead to OPEC to be cautious and say too soon to bring back all these barrels. There's just not enough certainty about the strength of the overall demand picture to start adding back significant quantities of barrels.
Helima, is it still ultimately Saudi Arabia largely calling the shots on the final direction here?
Well, what's important is there's a significant part of the overall production cut story that are voluntary cuts. And so Saudi Arabia retains a significant ability to impact the market in terms of the voluntary barrels that they can bring back at their own discretion. And so they do have the ability through that mechanism to really be the biggest voice within the overall OPEC production story. Now, there was some, drama over the weekend where you had the Iraqi oil minister seemingly indicating in one interview that Iraq was not going to go along with any further production cuts. But then he clarified his commentary saying that Iraq was committed to the overall OPEC production framework. And so I think Iraq will be on board with whatever OPEC decides. But there certainly was a little bit of drama over the weekend about what the second largest OPEC producer was going to do.